Hello and welcome to the Friday interest rate update. Well, we've now been over 7% for over a week, and it's likely we're going to hover in this area for a while. There is some good news for qualified buyers we will discuss later in this video. So, why are mortgage rates remaining elevated? In my opinion, it boils down to uncertainty. When you think about it, there are so many things that are uncertain right now, including inflation. Is it still going up or is it coming down? Russia versus Ukraine, Israel, Hamas and Iran, China and Taiwan. Jobs, are jobs really growing? Is it just in a certain sector? Economy, is it really expanding? Election, who's going to win? But actually, who's going to run? Can the $1.3 trillion in credit card debt that's been built up over the last couple of years, can that be paid back by consumers? What is the impact on AI on productivity and jobs? So, can anyone really predict what all these variables will do to the economy? No way. So, there's just too many things to predict, and only the gamblers are willing to risk taking a chance to be wrong. The majority remains status quo, and they're not going to do anything and just ride with the herd. So, I think we're going to just kind of go sideways for a while until we really see what happens. So, that said, it's really wait and see what happens. It's a hurry up and wait attitude. So typically, when there is uncertainty, there is a flight to safety. And that safety is usually the United States Treasury bonds or interest rate markets, such as the mortgage market. And that's where investors park their money, including from the overseas countries for a guaranteed return. So, however, there's been so much spent by the US government over the past few years to fund everything from the COVID area to Ukraine to other initiatives that there just aren't enough purchasers to buy all those bonds to lower interest rates. So they have to keep raising the interest rates and the bond yields to make it more attractive. This has also kept interest rates high. So inflation, while it's definitely getting under control, it's not going to be the full driver of interest rates going down. So what's a silver lining for home buyers? It is likely a pause in the increase of home values for the moment. So there's definitely pent-up demand for home buyers. We are already seeing multiple offers come back on attractive properties. People want to buy, and many can't buy what they really want because of the elevated rates. And there are definitely those who are really qualified, who can absolutely buy that home, but they're nervous that they're going to blow up their monthly budget taking on a higher mortgage payment than they feel comfortable with. They're very conservative and they just don't want to take on a higher payment, even though they can actually qualify for the house. So, the other big driver of real estate right now is inventory. And over time, there's simply not enough homes on the market to drive home values down significantly. According to Housing Wire, Nevada has 25.7% less inventory now in 2024 than in 2023. This is by far the biggest drop in the country. New York is second at 7.8% less inventory, followed by California at 7.2% less. So the home builders are filling this gap right now and making it attractive for the home buyer by paying closing costs and offering low interest rates. Home builders have the ability to price these costs into the home and pass it on to the consumer. At the end of the day, the home buyer is most interested, number one, in having a house to live in, but also a reasonable mortgage payment. And secondarily, do they have enough money to close on the home? So the builders paying closing costs helps tremendously. So for those purchasing existing homes, the seller has their property on the market for a reason. They want to sell it. So with less buyers able or willing to buy right now, those that go in now will likely pay less for the home. An existing home also benefit from typically paying lower real estate taxes and HOA fees than new homes. Also, seller paid closing costs could be a key in that transaction. So real estate is long term. While the home buyer may pay more now for the interest rate and mortgage payment, it is highly likely their payment will go down in the future because of lower rates. So keep your buyers educated, keep watching mortgage rates so they know when to fire back up their home buying journey. Hope you have a wonderful weekend. Please reach out if I can ever be of help, and we'll see you next week on the Friday interest rate update. Bye-bye.